and welcome to India Market Open. It's 15th March and I guess we'll all remember that day or remember today. It's a very, very busy morning. Lots of reaction, traders, investors, news channels, lots and lots of stuff happening. But I think, guys, I think the last few weeks have been about anticipation, nervousness about what the outcome is going to be.
Yeah.
The day is today, but it seems like, is it going to be take a break now that the reactions are here? Will we react negatively? Or will we just say, okay, we're done now, let's move on?
Yeah, well, Brutus and Caesar certainly remember 15th of March. So, yeah,
it's been a day of deadlines.
Yes,
deadlines met.
Crazy.
So electoral bond details are out, number one. Stress tests are out for most AMCs.
A lot of them, yes.
We'll be rating and grading them. Not all have done very well. Some have done relatively better. It's all on, the bell curve.
Bell curve, exactly.
So we'll see who's done well, who's not. Fuel prices have been cut, also widely anticipated. That's happened and, effective from today. I'm just asking now that the decks are cleared, the EC is also, quorum is full. Election dates today?
Yeah, election dates today, advance tax numbers tomorrow. It's gonna be as busy a weekend as the last 12 hours have been.
Correct. Now the question is, what does all of that mean for you this morning? So a lot of events. We need to break down implications for stocks you may have on your portfolio, on the market sentiment as a whole, and a lot more. So we're going to do that over the show this morning. Let's start with what the global cues are. Global cues are largely mixed, and US markets have actually taken a pause. They have snapped that winning streak because of the PPI figure. That's the producer price index. Think about it like the wholesale price index for the US. So it's come in hotter than expected and by a fair bit. So 0.6% for Feb. Expectation was 0.3%. You've seen that in the way stocks have closed yesterday, and we'll just pull that up for you, including the futures, to give you an idea of what's happened. Even the core figure has been higher than expected. So core PPI, when you remove food and energy, has come in at 0.3% versus an anticipation of 0.2%. That's impacted the bond yields, the 10-year inching up at 4.28 when I checked last. 4.28%. So that pain is going to be showing. Crude is another one that I must mention because crude prices have consistently been going higher. Good time actually for Indian consumers if the government gives a little bit of relief, though it's mostly election linked. So $85 per barrel is where we've reached on the Brent. Two factors: the continuing Ukrainian drone attacks on Russian oil facilities, and secondly, the inventory levels in the US are, lower than anticipated. So that's what's impacted crude. Quick look at how Asia is faring. Did not open too well. It was in the red and continues to show pressure. So, I just want to very, very quickly go through the fund flows before I hand to Niraj. So if you look at the global cues, not very positive from that end. But the fact is that we had a great day of recovery yesterday, and it is interesting to see who actually bought. FIs continued their selling spree, about 1,300 odd crores. DIs didn't buy too much, 139 crores. Safe to assume that the retail investors came in short covering as well?
Yeah, largely short covering. Just a point though, I think what worries me a little bit is crude price behavior because of what's happened currently.
Yeah.
So we are looking at a month of April and May wherein the US liquidity issues will come to the fore because of all the withdrawals that they've done. A lot of articles around how April, May could be the litmus test. So we have a bit of a liquidity squeeze in the US coming up. If crude prices spike in this period at a point of time when commodity costs for most companies will also start inching up relative to April, May, October, November, December, and sales growth doesn't quite perk up, we are looking at possible commentary of margin squeezes, macro stress if crude spikes up further. I mean, 85 is okay, but what if it does 90, 95, 100 in thereabouts in commentary? So I think there's a bit of an issue around a point of time when the markets are not at their best, as the market showed on Wednesday. So some stress may be coming up. Who knows? Any thoughts?
Yeah. No, so crude will be a big factor. I absolutely agree. But I think domestically right now, the focus is on a lot of stuff going on for us.
Most certainly. Okay, so very quickly the trade setup before we move on to the key talking points today, because there is electoral bonds, stress test and OMCs, all three to watch out for. So the surprise pullback, and I call it a surprise pullback because nobody anticipated what would happen yesterday. So it just kind of thwarts the out and out bearish trade, but caution, most people are saying still advisable. I mean, just look at the put strikes and that shows you how evenly spread the bets are. Yesterday, 21,700 was that key point. Now that's moved to a range of 22,100 to 21,900. Look at those option contracts out there, 1.57, 1.34, 87 lakhs. It's bunched up in a broad range for the Nifty. And I call it the broad range for the Nifty because the Nifty isn't moving much in the last few days. It is mainly the broad end of the spectrum. Banks not participating yesterday was a bit of a puzzle because they showed strength and resilience on Wednesday. There's the expectation of this FTSE rejig inflows coming in. One would have thought that if the Nifty were to be up, banks would lead it. Banks did not, and therefore that remains, to my mind, a key sector to be watched today and how it behaves. OMCs should correct. I mean, I will talk at length about it, but OMCs naturally would correct today, so that's a sector. And, you know, the stress test disclosures, at least the ones that I've seen thus far, the 3 AMCs that we saw last night, not alarming.
No, and they're all in line, except for DSP, which came in at 32 days for small cap. Axis, Nippon and Quant for the small cap fund liquidation, 50%, is only about 22 days.
Yeah. So, yeah.
I don't know about only. 22 days is a little
That's
worrying.
a global average, actually.
Yeah.
But
And you have to understand the regulator requires you to have at least 65% in small and mid cap if you are a small and mid cap fund. So I'm not sure how that could improve substantially in a small cap space, right?
No, sorry.
No, my only point was if you compare it to, say, an Edelweiss, you can compare it to an Aditya Birla. So, like I said, on the bell curve, if you have others who say they can do it in a shorter time, does that reflect negatively on you?
Yeah, so I just have 2 quick thoughts here. One, people who invest in a small cap
Are aware
fund
of the risk.
should invest with a belief that there will be a slightly more risk than what will happen otherwise, and therefore anticipate more returns. I mean, probably one reason why quant small cap funds have really shot through the roof, right? They've done
It's
really
high
well.
risk, high return.
They've taken a little bit of risk. Also, just the larger point is that, I mean, the stress situation is when only 10% of the market participation is available to MF schemes. 10%, right?
So 90% is...
10%. Right now, volumes are probably 2 or 3 times averages. So yes, you argue that stress test should be accounted for the whole year, what will happen in the future, etc. I'm talking about the current situation since they've released the stress test as of the last 10 days or as of yesterday or whatever you call it. We know volumes are high. We know participation will be high at the current point of time. Versus a 10% stress situation, volumes much, much higher. Somehow I thought that the results were okay.
I just want to take back to what Ajay Srivastava told us yesterday on this show. If they come and sell, who will buy these small cap stocks? Are they the buyers?
Yeah, well,
and that's really the question at the end of the day.
Which is why, but the point being, Tamanna, so if we are looking at 22 days for the entire liquidation, so the 50% of the liquidation, at a 10% market participation, the only point is, with the market participation being above normal right now, would they be able to liquidate in a stress situation easily relative to what has been? The answer seems to be a yes. And therefore, people, my limited belief is that people who will be flocking to some of the schemes wherein the number of days taken for liquidity are higher will go in with the belief that I will possibly get higher returns and I'm comfortable with that portfolio.
So I think it comes from a place of warning and telling investors, making them aware of the risk that is involved. It's not past performance, it's the fact that there could be, in a case where there's a liquidity worry, this happens. But also look at individual portfolios. Very rarely will you come across an investor who's got 100% portfolio in a small and mid-cap space. So if there is liquidity pressure, if there is an individual liquidity requirement, you may seek out liquidity from a large cap fund. You may not go after a smaller mid cap fund. So in my opinion, while this is good to know, I don't think it's going to be damaging in any sense from here on.
At the end of the day, the regulator wanted more information and transparency and awareness, and that has happened. So that's a good thing. Maybe initially for the first set of numbers, there may be a bit of trepidation, but then it will be normalized.
And I think another worry which comes to my mind, which is not from which is not so much from the number of days, is the size of assets. The bigger the AUM, the tougher it is to be nimble-footed, right? So I think that's one thing that market participants need to be concerned and wary about in that sense. When you're investing in a small and mid-cap fund, you don't want it to be too large, because if it's too large, the fund manager doesn't have the ability to go out and sell as aggressively or actively. The other thing on Nippon that was a good sort of point out is they'd stopped accepting lump sums all the way back in July. And if you look at inflows into mid and small cap between April and May last year, 70% of flows were going into small and mid-cap stocks. As of Jan and Feb, the numbers dropped to 30% now. So while it looks okay, I don't think it's going to have much of a material impact in that sense on the markets, at least this morning. But you know, we've been talking and we've not had a chance to look at implied Nifty. A quick check on what that is getting up to. It was a great sort of technical pullback for the bulls on the street yesterday. It looks bad actually, 108 points. Niraj, you want to come on this one? 22,100 I think will be important in terms of support.
Look at you guys, you're causing the crash.
We are causing the crash.
I'm wearing pink. I'm wearing pink.
Shade of red, shade of red, a little bit of white mix.
No, and you also have Bank Nifty weekly expiry. But
Yeah, but with the global
20,200,
markets,
yeah,
just the way they've behaved.
So there are a few things. There's global markets. Maybe stress test, people are looking at it, you know, initially with not so much of positiveness. And the other big thing is really the electoral bonds. And we're going to come to that in detail. But Samina, you want to just, are you done with your trade setup?
Yeah.
So
Very
you want to
quickly
just start
on
with your
OMCs, there has been a fuel price cut, unwarranted but not unexpected is what the big brokerages are calling in. Petrol and diesel prices have been cut by 2 rupees as effective from this morning. This comes in well timed just before the model code kicks in. This is going to impact GRMs. The stocks will also be reacting negatively. HPCL in particular will see a hit. Remember, diesel GRMs, marketing margins, have not broken even just yet. So any sort of fuel price cut is going to have a negative impact, a bigger impact on diesel play. HPCL, BPCL, IOC, 3 stocks to watch out for. Brokerages believe it wouldn't be a surprise if the fuel price cut gets revised back upward post-elections. But what's also very interesting to note is while this announcement came in, crude prices were trading at $85 a barrel. So there was no reduction in global crude prices. This is largely election play from what we understand. So unwarranted but not unexpected is the tagline for fuel price cuts. Well, that's one space, one very active space that we are watching out for. But the other factor you want to note with OMCs is brokerages do believe that while this has happened, prices will correct, but they're only going to make them so much more attractive. In fact, in the month of Feb, you saw a whole lot of mutual funds going out and buying stocks like HPCL, even when valuations for the broader markets were being questioned. So the price correction, the supply that will come in, will get picked up quite swiftly on these OMCs. Well, moving on from there, the few other names that are on my focus is NHPC and KPI Energy. KPI Green with PSPs in focus. Companies like NHPC have been signing deals with a number of state governments from Madhya Pradesh to Rajasthan to Gujarat. This is the second one in Gujarat with the Gujarat Urja Vikas Nigam. In fact, interestingly, we'll talk to the management on the show this morning to understand what this means for their top line, what this means for business at large. KPI Green as well has bagged a project from the Gujarat Urja Vikas Nigam. So same sort of order space for KPI Green and NHPC. NHPC will be on the channel very shortly, so we'll get a sense of that. But that's what I have, but there are a whole bunch of other and lots of other names that are going to be in focus. Electoral bonds, I don't know what this means for listed companies, but
There are a lot of listed companies in the list, first up. There are a lot of listed companies in the list, but it's not necessary that that's a negative because these donations have been made over a period of time. They're not very large numbers. The largest numbers are from unlisted players. And frankly, it's not illegal to invest in electoral bonds. It was just that there was an anonymity which no longer exists. Having said that, and we're going to have a more detailed report in a bit of what the implications could be, but just in the stocks to watch list, I was picking up Olectra Green. Olectra Green because the second highest donor for about 1,200 crores in all is a company called Megha Engineering, which has actually won a whole slate of infrastructural projects, including the metro stations, Ojila Pass. Large player. They've given about 1,200 crores. Now, they have a controlling stake in Olectra Green. It's a stock which will be on the radar. I'm not sure if it will react negatively.
Somehow, something tells me it might.
It may. It may.
very expensive. Maybe that's why.
That too.
Looking for a reason to sell.
I love it how you're looking for the fundamentals because the fact is that,
But you know, Tamanna, just come in. Actually, let's come on Olectra. The number of order wins they've seen. in the last couple of months, and we've discussed this, execution is going to be a challenge for them, and they've just been
Today, the story is going to be
awarded
going
orders.
back and matching the date of donation, the buys of the bonds
And the order wins.
And the order wins. So this is a whole different exercise that is going to go on. May have some impact. If you have Electra Green, I think be nimble and alert on what's happening with it. Vedanta is the other one only because it's in the top 10 of donors. Again, nothing illegal, nothing, you know, to be very, you know, upset or scared about, because it's a completely legal way until the Supreme Court struck it down. They've given about 375 crores. Vedanta has been through a slew of, I would say, headwinds in terms of other regulatory pressures. They're challenging a court order, etc. That's a different story. So Vedanta is one I would watch. Paytm is the other one, because again, news. What an evening we've had yesterday. So Paytm has finally got the TPAP license from NPCI for their UPI payments. I would say, in a sense, the overhang is behind them. The worst is over. 15th is the day when everything that the RBI said had to come into action, and it's all been neatly tied in a bow to ensure that there is no issue for users on the ground. So Axis Bank, HDFC Bank, Yes Bank, State Bank of India have become PSPs. That means if you have a Paytm account, you can continue to do transactions. The backend will be handled, very simply put, by all of these. I would look at Yes Bank as well, because they will now be getting a bulk of the merchants that Paytm has. What does this mean? So there's a Jeffries note which says the NCI approval removes last remaining regulatory challenge. And whenever that big cloud moves, it could be a positive for the stock. Paytm was not doing too badly, even through turbulent times. For Yes also, it could be interesting. There's already been a hit to payments value and app usage for Paytm. That's as per the Feb 24 data, 8 to 15%. The business model is now moving to a pure payments company. So there will be a re-rating on what really the value of this company is. And they will have to dip into cash reserves for customer retention, which we knew earlier as well. But at least there is clarity now on what is left of 197 communications. So those are the few on the list.
Yeah, just very quickly, 2 or 3 more. So watch out for financials, like we said, that today could be interesting. They didn't participate yesterday, but do HDFC Bank and other banks come into flavor today because brokerages expect about $1.5 to $1.7 billion of inflows due to the FTSE rejig. So watch out for some of the financials in the session today for sure, in addition to OMCs as a pack that remains firmly in focus. Watch out for a couple of these bulk trades. So Sundaram Clayton is an interesting one. While Venu Srinivasan sold, and that's a marquee name selling out or selling some of the shares, but SBIMF bought 7.74 lakh shares. More importantly, Govind Parekh bought about 5.35 lakh shares. As noted, an investor in the country as they come. Watch out for Sundaram Clayton. Could be an interesting one. Watch out for Gopal Snacks. Quant AMC is the buyer. They bought over 15 lakh shares at about 374 rupees a share. So Gopal Snacks could be an interesting one. Usually Quant's name evokes response. So maybe, just maybe, this one is in focus today as well. So these are a few that certainly stand out. There are some brokerage notes like Morgan Stanley on Paytm is pretty sanguine after the development. So let's see if that one has a bit of a reaction. Tamanna spoke about it. So there are a few that you need to keep in mind when it comes to stock-specific moves in the session today.